Tesla reports today. It's the current price 433. Oh, it's been open about 30 minutes. EGFs are flat. You know, it could be worse, could be negative. Could be like aim it. So flat EGFs, that means no growth. Now the big one, the B range. Look at this, 482%, 484%. It's nuts. It's just gone up a little bit more. What is it? 438. This is popped higher. This is ridiculous. Let's take a look. To me, this is ridiculous valuation. You know, this is. The problem is, it's got epically high valuation, but no growth. Now look at Micron. That's got epic valuations, but look at the EGFs, 67%, 168%. That, I'm not saying it justifies 36%, but I can understand why Micron has gone up, why Micron's going up. Anyway, we're dealing with Tesla. Let's go to stock chart. This company is nuts. So here's my Tesla chart. As you can see, I'm expecting a down move. Down to 150. Ooh, that would be an epic collapse if it happened. So far, it's following the trend trajectory towards 150. I'm not saying it's going to be exactly in line with this night to get there by the end of May, but it's following it pretty well. And en route to 350 is, 150 is first target 350. So I expect it to fall to 350, then bounce, and their next target is 230. Now I'd say that's my base case, because there are a lot of people who just pile into Tesco. I think it's gonna be tough, like here last time. Yeah, Tesla did not fall below 200. It went down to 215. Oh, Nadeem, why is Tesla not falling? Well, it did fall. It went from here, 488, down to 215. And yes, we've had this mother of all rally. Really, this is where it should have terminated, at the halfway mark around 350. But they just pumped it higher and higher on complete, nothing, on hot air. There's nothing to justify this move. And we got another new high. That's incredible. I have to say, this is like a surprise to me. I was expecting a bounce, but not another new all-time high. So there is a chance that Tesla does not do what I expected to do, in which case I do not understand the stock. Not completely. I understand enough to buy it here and sell it here, and then expect it to drop, which it did, and then accumulate some here that I trimmed here. Yeah, I was expecting it to do this. Yeah, something like this. Instead it went through that and up. So this move here is unexpected. So when people say you're wrong about Tesla, I'm wrong about this move. Yeah, I got this right, selling at 484. I was arguing with people in the comments who were determined it's going to go up to 600. I go, no, it's going to go back below 200. And then it collapsed, after his Nazi salutes. It collapsed to 220, and it seemed like it was a done deal. I did accumulate on this drop, but not much, because I was expecting it to go below 200. But it didn't. It went up. Okay, we got a corrective rally. Yeah, that'll retrace half to about 350. Fine. He did that, and then he started to fall again, and it should have been here, but no. It did its own thing. This part I got wrong. I wasn't expecting a new high. And now I am betting on, I piled on quite a large short position using the inverse ETF. -1x. So I am short, and it's probably around the, I think I am at the break even mark roughly. I think at 420 I break even, because the ETF, it loses value over time, and it's been, you know, it's been about 4 months, so it's lost about 5%, 10%. So even though my average buying is around maybe around 430, I'm down a little bit because it's losing time value. Anyway, primary, I mean, next target, first target 350. It seems to be on course for it. Target after that is 230. The reason being because it didn't break below 200, so there's a chance it stops falling here around 230. It won't break these lows because it didn't break these lows. But if it does break below these lows, then it's going to 150 when I will load up the back of the truck. But this is Tesla. It could keep falling. What am I doing? It could keep falling. It could keep going down. You know, it could go. Oh, it could go to maybe below 70. And now that is in the far distant future. But that's the risk when buying Tesla. The reason I'm saying that is because the metrics are so bad. That's why I don't want to be holding the Tesla bag for too long. I want to trade it up and then short it down and then exit and then short it down, then trade it up, then exit and short it down, then trade it up, then exit and short it down. I was doing it successfully. Only this part's got me a bit. You're not going to be right all the time. So I did this correctly. I did this correctly. And this is a surprise. And I shorted it here. And now it's starting to come down. If Tesla breaks the new all-time, you know, then I've lost the plot with Tesla. I am short, so if it goes up, my shorts will go even more drawdown. It could end up being a loser eventually if it doesn't come back down. But I expect it to get to 230 this year. Below 230 I'm not sure about, because there's too many fanboys waiting to buy. They'll be waiting to buy here or under 200, and it might not drop there. But if it does go below 200, it's going to 150. And I'll buy a decent sized position. I won't like throw all my money in. Maybe at one, because I made a lot of money on the rally. You know, in fact, Tesla, I think, is my biggest profit. The most profit I've made on a stock, single stock, is Tesla, or it might be Meta. So I'll have to look. But I know it was at one point. And if it collapses again, I'm going to make a ton on the shorts. And buying the dip, I can rinse and repeat. Because what Tesla is, what these fanboys don't understand, Tesla is a range trader. Look at it. It's gone nowhere since its November 2021 high. Do you see? 411. What is it now? 435. So it's gone nowhere in 4 years. It's a range trader. So you act accordingly. When it goes below 200, you accumulate. When it goes above, say above 400, you start distributing and adding shorts. Yeah, so it looks like these are the milestones: 350, 230, which is my base case for Tesla. Below that, I would now class it as getting lucky, because there's a fair chance it won't break below 200, but I'll have buy orders there. I'll buy orders all the way down to 150, and once we get there, then we can see about further buy orders down to 120. But for now, 350, I'll start buying a little bit, tiny exposure in case it pops higher again, and then I'll be buying a lot below under 300. When I mean a lot, I mean I don't hold any at the moment. So by 230, it might be 1% of my portfolio. So here I might buy 0.2% of portfolio, so about 0.8% added here, and 350 another 1%, maybe more, maybe you might get to 2% or between 2 and 2.5% of portfolio. It depends what the other stocks do, because this is the only stock I'm buying and it's falling and I'll buy a lot. If everything's falling, you know, I have to see what else is falling. Anyway, it's earnings today and it's currently trading at 434. We're gonna find out. Look, it's moving in direction. It's moving in the expected direction, so it's not like it's completely going opposite to expectation. It's putting a high, the range high. I can't see it. I can't see Tesla breaking higher with garbage metrics like this. There's no earnings growth and the valuation is nuts. Look at the PE. What? That's not Tesla. What am I doing? 229. It's ridiculous. There's nothing to justify Tesla 229. Just pure FOMO. If it breaks to a new all-time high, unless there's a massive turnaround in earnings, like this goes nuts like Micron has, 67%. Unless something like that happens, then that would justify the price movement. But there is no justification for this valuation, not right now. And so I'm positioned for Tesla to drop, and if it goes to a new all-time high, I'll have to just say I don't understand Tesla anymore. It's not behaving. I can't understand this move. I don't understand this move. It's pure hype. Yeah, and it could continue hyping, but I have to be positioned for what's most probable. That is 350 en route to 230 base case, and by then I'll know if it's destined for 150. I'll accumulate all the way between 350 and 230, increasingly small here, large here, and then if it pumps, I'll trim some and accumulate more. We'll see how it goes. It reports earnings in about 6 hours time. We'll find out then. And this video is a mere fraction of my extensive analysis that is first made available to patrons who support my work. So for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $9 per month, which is nothing compared to what you get access to. I try to do best by my patrons. Folk only need to go read my articles open to the public and the literal thousands of comments under them. Look at this one, 2,200, nearly 2,300 comments under this article, which shows the level of engagement with patrons. Keep calm and carry on buying AI tech stocks as they deviate from their highs. Where the greater the deviation, then the greater the buying opportunity presented. Keep calm and carry on buying. Quantum AI tech stocks. Access to my latest mega analysis, a comprehensive 3-part guide on how to really get rich during 2020. That has exclusively been made available to patrons right now. You can go and read the 3 guides right now, full access, which is a truly epic piece of work that took me the whole of 2023 to write, which condenses down my lifetime knowledge and experience down to some 60 chapters, which is on top of my ongoing analysis and trend forecasts that are made available to patrons for just $1 per month. There are no bolt-on extras, no courses, no the crap that all these con merchants do. You get full access to everything. So, did you buy the October 22 bloodbath? Especially in tech stocks, fangs, with the likes of Meta plunging below $100? Well, I and my patrons did. Go read my articles and the comments posted under them. We got well blooded by catching all those falling knives. Did you make the mistake of listening to the likes of Clown Kramer on the Cartoon Network, who stated Meta, amongst others, was finished? Meta finished at $100 a share. It was the mother of all buying opportunities. This clown stated it was finished. Says it all about Clown Kramer and the Cartoon Network.
They're finished. They're finished as places.
They're finished. They're finished as
places to invest.
We keep talking about this falling knife, as if the knife continues to fall. Though there are people who look at this and say,
look, I'm looking at the money coming out. Where's the money coming from to buy to buy industrials? It certainly isn't coming from new people saying, "Wow, it's time to put money in the stock market," because they get such a great rate on the 2-year. I think it's money coming rotating out of companies that have dominated this market for the last decade and into companies like Caterpillar who actually know what the hell they're doing.
Are you thinking that the tech companies that I think that you're disappointed in are going to get religion, if you will, and get disciplined? And what does discipline look like?
You know what they are? I would call them atheists. They believe in nothing.
That's a nihilist.
Meta? I don't know. I think they have to change the name again. They really do. I mean, you can't be saying Meta. I don't know. How about loser? How about Stuputa? I don't know. Anything doesn't even matter. I don't know if they can make a comeback. The facts have changed, and I have to change with it. I believed. I thought I'd be safe. I was wrong. Bottom line, forget being leaders. Big stocks are now followers in a post-COVID era, where we're learning that their earnings were far more inflated by the pandemic than we knew. We're just now discovering that tech emperors have no clothes, if they're even emperors at all.
So at least give it a try. Read the comments, see the depth of analysis. You won't be sorry because I do my best by my patrons. Go that extra mile. Gaining access to over 35 years experience. Right from before the 1987 crash, straight through to this stock's bear market. That we ride the quantum AI megatrend into the future.